Welcome in Dale Smothers, President and CEO of RDS Wealth Management. Dale, the S&P 500 continues to just chug higher here. You see it reaching 6550 by year end. Why stop there? I mean, look at how close we are to that now. Now, September's obviously coming up, which could present some volatility. So tell us about what fuels that viewpoint that it reaches 6550.
Yeah, I think 6550 is certainly in the cards, but with that volatility that is normal for the month of September and October. We talk about that to clients as the financial winter, Diane. Is August, September, and October traditionally poses a little bit of a reason for the market to pause. 56% of the time, September is lower. So prepping for this type of volatility in September is something that emotionally can prepare an investor to weather the storm of potentially a financial winter.
I feel like we're talking Farmer's Almanac here, which I was checking recently because the chill is in the air here, and I feel like summer is ending too soon. And, you know, the Bulls wouldn't like to hear that about summer potentially ending sooner rather than later. But look, like you make a great point about the patterns in September. So when you think about that and the warning about a potential financial winter, is that just a bumpy period in terms of the seasonal kind of September, maybe a little bit of spillover into October?
I think it is. I think that we see investors starting to wake up to the fact that some of these stocks, specifically AI stocks that have been overvalued, may be something to pause on, and with that potentially a broadening out in the S&P 500. At the end of the day, though, we are going to hear an earnings call that is going to move the market one way or the other. Nvidia is certainly in our focus right now.
What if they're not overvalued? I mean, let's talk, you know, Nvidia for a little bit here. I mean, it's like the marquee event today, right?
Certainly.
It has a big weighting in the S&P 500, the NASDAQ. You know, what if there is still a lot of meat left on the bone?
There is a lot of meat left on the bone. I am not in the camp of it's overvalued for the long term, but I think the short-term overvaluation is there. We can't make semiconductors fast enough for the demand, and this type of a run-up is going to cause periods of pullback. We're seeing it in ancillary, if you will, AI companies like Palantir is a great example. Nvidia, though, if you think through Nvidia's position, it is the king of the castle. If we're talking AI, it will demand attention, whether it's up or down. The market will move based off of the earnings today, and the earnings today is likely going to be a positive one for the market. With that being said, I think we're going to see some ancillary companies that are even right now posting losses on their balance sheet continue to go higher in spite of their losses internally because of the Nvidia optimism around AI.
Yeah, but to be fair, even if it posts positive results, beat and raise, in recent quarters, it sold off the back of it, just, you know, in terms of the trends. But let's talk a little bit about that, you know, the concentration risk. What do you think about diversification now, especially in terms of broadening out?
I'm so glad you bring that up because, Diane, we see clients every day that are diversified in their mind. The S&P 500, you know, we've got 11 sectors across the broadened S&P 500, and the reality is those 11 sectors are it's true, you do own all 11 sectors, but the top 10 stocks in the S&P 500 make up the majority of the S&P 500. The S&P 490 haven't done much year to date. The S&P 10 has done pretty much all of that type of growth that we've seen. As much as 40%, close to 40% of the S&P 500 is concentrated in those top 10 companies. And most of those, except maybe Berkshire Hathaway, are AI-led companies. So this AI trend is going to either make the market move higher or lower. To your point, I think we're in the early innings. But I'm definitely not going to say that we won't see some strikes along the way. The early innings are true. I think we're in the early innings of the game, but the volatility will still be there. And overexposure to those AI names could leave investors feeling as if they're going to lose all of their money in those big pullbacks.
Okay. Obviously, a lot of focus today is on Nvidia for good reason, but there's a member of the Mag 7 that you've been paying attention to. It's lagged year to date. You're still bullish on it, though. We're talking Apple.
Apple.
So where do you see it going? What makes you confident in it now, especially given that it's lagged the rest of the group?
Sure, and that's one of the reasons that we are as confident as we are. We've bought Apple for quite a while in this lagging period of time. It's been range bound for quite some time. And Apple is one that has been late to the game with AI, which is one of the reasons it's lagged so much. In addition to its China trade confusion and whether or not it can open up the businesses that it desires in China, and all of the China trade has also caused a little bit of short-term volatility. But AI has not yet been something we can champion at Apple. When they make the move, and they've been late to the game, no doubt, but they have the brand power to do that. They have waited it out to see which would be the best option to go. In our opinion, when Apple picks their AI platform to operate on and they enhance that, I think today I heard that they were announcing a new iPhone sometime in September. This is going to spur optimism in that stock.
Okay, and let's talk another kind of Nvidia offshoot, if you will, CoreWeave, right? Nvidia's a big investor there. You compare it to an early stage Nvidia story. The stock has had a significant run since coming to public markets. The past month has been bumpy.
It's been terrible.
One. Yeah.
I mean, just use the word. It's terrible. The last month has not been a time to have bought at the top, right? It went up to $180 a share. We were big buyers at 75. We bought a little bit more at 100. We actually trimmed a little bit of our position at 150, and we've held it all the way down. The position that we still held, we've held all the way down, and we were buying in the 80s and 90s again.
Okay.
And we're big time believers in the long-term value of CoreWeave. At this point, though, CoreWeave is unique because it also gives us that type of price action we like to see if we're trading stocks. If we're doing swing trades, you can make some serious money in CoreWeave. But long-term, I think that it is a good place to buy anything under $100 a share, and you better do it quick because I think when Nvidia posts its earnings, we could see a substantial amount of price action in that stock, likely to the high side.
Okay. I want to ask you about some equal weighted strategies. This is something that you pay attention to. You talk about investors who can't afford a big setback, especially, I suppose, if you put in the context of a potential financial winter. How do you approach that?
Yeah, and Diane, I want to be very clear. I am bullish on the market. Clearly, with my price target, the S&P 500, I think it ends the year positive. But I do see us having this period of volatility, and so one of the ways that we're weathering the storm with our clients, because our clients have worked hard to get to where they are, and they can't afford these substantial setbacks. And the last thing we would want them to do emotionally is to sell at the bottom of a normal 10% sell-off, because that's typical in a given year. From peak to trough, a 10% move. We've already seen some of that in early August, a little bit of a sell-off in spite of positive earnings. So how we're weathering that, how we're kind of playing the game, rather than go to cash, which I think is a bad decision because you can't time the market, and we are early in the innings of the AI trade, we move to an equal weighted position because we had talked about the concentration at the top of the S&P 500. Let's broaden it out. And if the market becomes a more broad market, we benefit. If the market continues to climb higher because of AI, we still have exposure. And in the time that we see that setback from these AI names that we like, Google perhaps, Microsoft, if we see a pullback, then we buy the name. We move from the index to the name. So we're talking about moving to an index now with the earnings, especially any of the profit that you have on the table. Take some of that off, put it into this equal weighted exposure, and you'll see that you have an opportunity to buy those names at a more valued, friendly position.
Okay, all right, Dale, we'll leave our conversation there for today. Appreciate it. That's Dale Smothers, President and CEO of RDS Wealth Management. Our thanks to Dale.